For weeks, U.S. President-elect Donald Trump and Russian strongman Vladimir Putin have been dominating the world stage. While they are stealing the spotlight, it's easy to overlook the performance of the global economy. The German government reported that gross domestic product expanded 1.9% in 2016 in inflation-adjusted terms, the best since 2011, beating the government's own forecast for 1.8% growth. It was a nice surprise because, as Europe's largest economy, Germany is key to the continent's economic, political, and defense organizations. The German economy grew by 1.6% in 2014 and 1.7% in 2015, with annual growth for the last 10 years averaging 1.4%. The newly released 1.9% estimated growth rate for 2016 is a clear sign of accelerating growth. The better-than-expected GDP report from Germany adds a new dimension to the performance of the U.S. economy, which has consistently been experiencing positive economic surprises since June 2016. The surge in the Citigroup Economic Surprise Index confirms that economists have consistently been surprised by a stream of better-than-expected reports on U.S. economic growth. And this same trend may be going global, as global economies are also surprising on the upside. This is an index of global economic activity at large companies across 8 industry sectors. It's based on surveys of purchasing managers, averaged quarterly. The blue bars show the latest level of activity in these sectors for the month of December 2016, as compiled by Market, a global data and research company. And the red bars show the monthly average in each industry for all of 2016. 5 of the 8 sectors registered their strongest quarter for the year in the final 3 months of 2016, and the remaining 3 sectors achieved their second strongest growth rates of 2016. Growth in December 2016 versus the 12-month average has accelerated sharply. For the first time since the Great Recession, the global outlook is bright. Across the world, business in the tech sector in December 2016 was booming, just ahead of financials and consumer goods. Consumer services and telecommunication services saw comparatively weak rates of expansion. Basic materials continued to recover after a period of prolonged weakness. Ironically, fear that the low prices of basic materials would trigger a global slowdown led to a double-digit loss in stock prices just 12 months earlier. Just the opposite of what investors feared is happening. And while the Trump and Putin act has the world's attention, the global economy just gave its best performance of the year. The Standard & Poor's 500 index at its most recent close was hovering near its all-time high, and the tech-heavy NASDAQ Composite Index broke its record high for the last 4 consecutive days. Associated Press reported that J.P. Morgan Chase, Bank of America, and Wells Fargo all announced profits exceeding Wall Street's expectations. A drop in stock prices historically occurs every year or two, but past performance does not indicate future results. Recent investor ebullience is supported by economic fundamentals, and now evidence of global expansion is increasing. Stock prices could head higher or not. Investors are fickle, and some are likely to sell when something unexpected happens and sentiment shifts. Political, social, and other turmoil could set off a correction of 10 or even 20%. With fake news flourishing and major stock price indexes hitting new highs, we are an independent source of breaking news about managing your wealth for the long run. And we're not influenced by big media, Wall Street, or politics. Our weekly reports are not intended as advice, but a way to share with you prudent analysis of economic data from authoritative sources, the news investors care about. Please feel free to share our reports with your family and friends.